Hello everybody. So today I want to talk briefly about ENOVIX and talk about it again, the second time I talk about it on the channel. So they reported their earnings and of course revenue $42,000 for the quarter, cost of revenue $12.2 million, and operating expenses $19.9 million, as you would expect for a pre-revenue company. And note that if you were to use GAAP metrics, it'd be even worse. But of course, I don't use GAAP metrics in any of my analyses because I don't believe dilution should count against the company. I think it's a fair thing to do to dilute the shareholder in order to decrease your odds of bankruptcy, and I like that they do that. But this is obviously a company that is too early for my investing style, so I am out of this stock. But I'm nonetheless looking at it because I'm fascinated by batteries. I think batteries are key to this energy revolution trend that we're going through, whether it is through stocks that I cover on the channel all the time, like ENVX or Tesla, all of the solar stocks. Battery is one of the building blocks of that. It's the essential block. And that's why investing in a company like ENOVIX is so hard for me, even though I really like that product. And the more I look at it, the more I like the product. But it's so hard to do because a pre-revenue company, it's very high risk. It's highest risk. It has the potential highest reward, but it is the highest risk. And when I look at a company like ENOVIX, I think about J-curves. And so this was tweeted by Hike Not Enough on Twitter. And it shows you the journey of Tesla since the beginning, right? The money-losing journey of Tesla. Right, and digging yourself deeper and deeper and deeper into the money-losing hole until you finally get out, and as your product adoption goes, then your revenue goes up. And typically, the companies that I invest in, typically they're like right here. They're typically, 4 quarters, 2 quarters away from quote-unquote conventional net income or conventional earnings. I care that I can see visibility on the cash flow, and as long as the cash flow is flat, I really don't care that much. But obviously, if you have a company that's early on, which I estimate if you were to map out ENOVIX where they are compared to Tesla, they're right here. There's a lot of uncertainty, even 5 years out. There would be a lot of uncertainty. And when I look at ENOVIX from the standpoint of what I usually use on my channel, which is S-curves and my S-curves. So as you may know, I like to invest in companies that exhibit about 5% adoption of their main product as seen through their sales. And I typically get out at 70-80%. And obviously, ENOVIX is nowhere near 5% of all of the batteries sold in the world. So obviously, it's not my style of investing. But if you look at where ENOVIX is, it's way, way back, right? The revenue up, down is meaningless. I don't even understand why it's reported in the headlines, right? Because that revenue right now is meaningless. ENOVIX is a company that is investing in the product, that is investing in the manufacturing. It is not a company that has reached significant commercialization yet. It's a pre-revenue company. And of course, what is the reward of investing in a company very, very early? Well, we have the best example with Tesla, right? Whoever bought Tesla even 2 years after the IPO still ended up with an amazing 45% compound average annual growth rate over a 10-year period. Absolutely outstanding. But as Elon has stated multiple times, Tesla could have gone bankrupt. Right? He stated that. And of course, we understand when you go back on this chart, 2018, 2019, these were very, very precarious times for Tesla, and they could have gone bankrupt no matter how good the product was. And of course, they didn't. But it is the risk you take when you invest in a pre-revenue company. And I think, given that I'm in my mid-30s, to me, that's a big risk. I like capital preservation quite a bit. But nonetheless, in my view, investing in a company like ENOVIX is mostly a question of technology and your understanding of the technology and your belief in the technology. And of course, the demand for a better battery is very obvious. We have AI that's going to come to all of our devices. So many of our computations in our phones, in our smartwatches, etc., are done on the edge. Of course, compute costs a lot of energy, and you gotta have a battery. Wouldn't it be nice to have, say, an Apple Watch, for example, that would last 7 days, that you didn't have to charge every night, or a phone that would last 3 or 4 days? So that's a challenge, and you also have a challenge of range. So the demand for a product is well understood. There's going to be a tsunami of battery needs out there. Everybody's going to want batteries. But is the battery of ENOVIX a step change? Are they doing something that nobody else wants to do? So what are they doing really? What they're doing is they are changing the way lithium-ion batteries are architectured. They're moving away from the traditional method of manufacturing, which uses graphite anodes. And graphite anodes have a theoretical capacity of 372 milliamps hours per gram, right? And they're moving to silicon anodes. And silicon, right, that's the reason why so many of the executives in that company come from the semi space, right? The semiconductor space, because they're experts in silicons. And we know there's a lot of similarities. And so they're using their manufacturing expertise at Cypress Semi and at all of these, or Qualcomm, all of these other companies in the semi industry, trying to apply them to the battery industry. And that's why they believe that their technology and their 3D cell architecture, which underlies their technology, is going to help them to mass commercialize this new version of a battery that uses a graphite anode. And a silicon anode. And a silicon anode is purported to have 3,500 milliamp hours per gram. So a silicon anode, what ENOVIX is pursuing, would have 9 times more battery storage capacity than a conventional graphite anode. 9 times more. And so, thus, that would be a big deal. That would be a step change. That would be a 0 to 1 move, close to a 10x improvement. Now, I just want to point out that it's as much as, right? What they mean is as much as. And they also specifically talk about the anode. Let's be careful here. The battery capacity is related, but it's somewhat different. But it's a theoretical maximum. So theoretically, after years and years of refinement of their process and their batteries, theoretically, this company could achieve a battery that could last almost 10 times as long. Right, and the battery that they've manufactured so far in their current form are 2 times better, up to 2 times better than traditional lithium-ion batteries, which is already very, very good. And this is where we get into hoping and dreaming a little bit. Like, what if this company is actually able to have, maybe not a 10x, but let's say 5 years from now, have a battery that has 5 times more capacity than what we have currently with the best type of batteries out there, which are the lithium-ion batteries. What if we could do just a 5x, right? Well, then the total addressable market would become enormous, right? Electronic devices would last multiple days. You wouldn't have to recharge them as much. Your cars, I'm a believer in the original vision of Tesla, which is the 3,000-mile car. Your cars could get really close to that level, right? Your cars could get to 2,000 miles if you had a battery that was 5 times more capacity. You could have a 2,000-mile car. That's amazing. But also, and this is something that I'm putting out there. I didn't see this in their report, but that's also something that could apply to planes, right? Planes are going to go electric one day or another, and if you have a battery that is between 5 and 9 times better, that's something you could put in a plane, and you could power potentially a plane with a battery. It's amazing that they can do that. But of course, the risk is there. And to me, the big risk, and they know it. That's why they call it their journey to scale. The risk is manufacturing, right? So they're working on Gen 2. They're working on their new manufacturing facility in Malaysia. And if you looked at the call was very proud to show the progress. But nonetheless, it's a major risk. And the key question to me is, can they actually scale it to hundreds of millions of individual batteries eventually? That is the very big risk that one is taking. That is the big question. Although I am not a manufacturing expert, I will say one of the issues with non-continuous manufacturing, or one of the issues I think that we're going to have compared to round manufacturing, like rolling a coil, and they show it in the demonstration on their website. Rolling a coil, just like a paper roll, is something that you can manufacture very, very quickly. And if you look at the Tesla manufacturing process for batteries, for round batteries, it can go extremely quickly. The challenge is ENOVIX going to be able to manufacture something as quickly with the form factor that it has, right? Round batteries, we have a lot of experience manufacturing them. Batteries like this, I believe we have fewer experience manufacturing it, and this is where the experience of that management team comes in, that technical teams comes in, and their experience with semiconductors come in, and we will see. I still believe this company is too risky for me, but it is very interesting, and if they can pull it off, I believe the returns could be outstanding. Just too risky for me. Thank you so much for watching. This is not investment advice. This is just entertainment. Appreciate your likes. Appreciate your subscribes. Have a wonderful day.